Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. And boy, do I have some headlines for you. What I want to talk about today is what is going to be hitting your credit this fall. And at the time of this recording, it is the end of August, so we are weeks away officially from fall. So I don't have an exact date of when this is going to happen, but get ready because buy now, pay later loans are going to be joining your credit score. So changes are coming on how it's reported. And what we used to think was many of those buy now, pay later purchases were invisible. They are now officially going to be part of the game. And this is going to be reported on your FICO report. They are now rewriting the rules. So I'm quoting Julie May. She's the vice president at FICO, and she says, buy now, pay later loans are playing an increasingly important role in consumers' financial lives. We're enabling lenders to more accurately evaluate credit readiness, especially for consumers whose first credit experience is through buy now, pay later loans. So this isn't just a tweak. It is the first time that short-term installment plans, those split into, 4 or 6 payments at checkout, that they'll be measured like real credit. And that changes how lenders see you and how credit scores might appear on your behalf. So why is this important? Approximately 15% of people have used buy now, pay later loans in the past year, which is up from 10% just a couple of years ago. And some surveys have put it over 40%. So I think it really has a lot to do with who their market is that they're surveying and asking these questions of, because people are using buy now, pay later for more than just like shoes and gadgets and technology. Approximately 25% of users now buy groceries with buy now, pay later loans. And that's up from 14% just 1 year ago. And for our Gen Z audience, 1/3 of Gen Zers are using buy now, pay later for food, after clothing, tech, and home decor. So buy now, pay later used to really just be like convenience for splurges, or, well, why have it all come out of my checking account if I can split it up over the next 4 months? But for some, it's now a survival tool. And this tells us something. Buy now, pay later isn't just about spending. It's really showing us that there's a financial strain, that inflation and pressures people are facing every day on stretching their dollar as far as possible is really taking its toll. As of the time of this recording, the average credit score, according to FICO, is 715, which falls into the good category. And so there's good, very good, exceptional, right? 780 to 850. And then there's the, well, you need some work, but let's just focus on what this might do for our credit scores. Most Americans fall somewhere in the middle in that good portion, right? Buy now, pay later is now that wild card, and it could tilt your credit up or down, especially if you're already close to the edge, like between fair and good. And that could affect your ability to qualify for a mortgage, an auto loan, or if you are looking for more permanent long-term credit relationships, a credit card. So why is any of this important? There's a couple of new models that are coming out from FICO in their scoring model, and it's the FICO Score 10 BNPL, standing for buy now, pay later, and the FICO Score 10T, buy now, pay later. And they're using this data, how they explain it, to better reflect modern consumer behavior and drive financial inclusion. So in other words, there's a lot of people who are saying, hey, I simply don't want to go into debt. I don't want to take on credit cards. I don't want to take on loans. And so they're really attracted to buy now, pay later because it helps them spread out that financial obligation on that purchase. Or it literally and physically gives you more month to your money. It just spreads it out further. So FICO did a year-long study, and they confirmed that there's this unique consumer behavior behind buy now, pay later, and there's this potential for a very large amount of these loans to be opened. And they wanted to be able to include that in certain models. Remember, I've shared with you many times, and I'll say it again now, there are literally dozens and dozens and dozens of scoring models out there. And so now FICO has just now created these 2 new ones. And how FICO is presenting it, and I quote, "This innovation also supports our mission to expand financial inclusion by helping more consumers gain access to credit." So let's break this down. The Score 10 BNPL, it's your snapshot score. And now it is adding that buy now, pay later data. The Score 10T BNPL, that T stands for trend. So it doesn't just look at today, like this snapshot in time. It looks at your behaviors over time with the buy now, pay later. Do you open buy now, pay later loans constantly? Do you pay them consistently? And that trend line will tell lenders if you're reliable or if you're risky. And that's how they'll create a credit profile for you if you don't have credit cards and auto loans otherwise. So why does this even matter? Well, lenders want greater visibility into repayment habits. That's how they determine what kind of interest rate to give and if they should loan you money. They need to know your repayment habits. And for you as a consumer, this could be great news, because if you are responsible with buy now, pay later use, in other words, you don't go crazy into debt with it and you pay it back on time and like a responsible human being, this way you are now actually credit building. And so if you have a thin credit history by choice or maybe just by age, this can help you show up in a way that you may not have had a credit score before. Now, on the other side of this, because I'd like to see both sides of the coin, late payments are kind of an exploding trend right now, and that's likely going to be the topic of my next episode. So the Fed out of St. Louis reports that credit card delinquencies rose 63% in the lowest income sectors over the last 4 years. And buy now, pay later late payments, they're creeping higher too. So 41% of people using this type of loan admitted being late in the last year. So buy now, pay later isn't a free pass anymore. A $25 missed buy now, pay later payment can now hurt you just like missing a $250 credit card bill. And lenders are paying attention. So even if you always pay on time, too much buy now, pay later loans might make them think you're stretched a little too thin. Here's my challenge to you. Pull your credit report this month. Look for any buy now, pay later entries and ask yourself, did I use the buy now, pay later loan for what I want, or was it for a need? And is it reflecting that you're using it to build a score with it, or are you hiding financial stress under it? Because we now need to treat these buy now, pay later loans as real loans, because now officially it is, if it's getting reported on your credit report. So this way you'll stay in control of your story instead of potentially letting your score get out of control before you even thought you had a shot at building credit. So credit scores and their scoring models, they're really evolving. So now that you know how buy now, pay later loans are going to play into your score, you can use it as a stepping stone. But make a late payment and it can be a stumbling block to building a great credit profile. So stay consistent, try not to get buried underneath them, and know that it's going to soon be reflecting on your credit report. And that can be a very, very powerful tool to building a credit profile without going into additional debt with standard loans and credit card balances. So you're not just managing payments, you are building your financial future as far as how you look on paper. So I'm curious, have you signed up for and used a buy now, pay later loan in the last year? Were you able to pay it back easily? Did you remember to make those payments, or was it, oh shoot, I just got a push notification and I forgot this amount was due? And at the end of it, do you feel like it was helpful or hurtful? I'd love to hear from you as your thoughts. Is this a great tool or is it dangling temptation? And just know these payments are soon going to start getting reported. So be cautious and careful with the repayment, not only to avoid charges and excess APR, but also because it's going to be showing up on a credit profile reflecting your ability to manage money and pay it back on time. Hey, thanks so much for listening. And in case you didn't hear the great news, I just published my 3rd book. and I think you are going to love it. It is called Peopling. It's on Amazon. I will have a link to the book in the show notes, and I thank you so much for joining me for another episode. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.